What is going on YouTube? It's your boy Dollar Mike back at again with another video. If you guys couldn't tell by the title, yes, it's another dividend video. I'm actually going to show you guys a step-by-step process of how to begin your dividend portfolio, how to start it from $0 of passive income all the way up to $1,000 in passive income. Currently for my dividend portfolio, it's sitting at a little bit over $800 in passive income right this moment, with a goal of hitting $1,000 in passive income by the end of this year, which we'll definitely reach. So we're going from zero to hero in this video, so let's not waste any more time, and shout out to Moise for actually recommending this video to me in the comments section. So definitely guys, if you have any questions or comments, let me know down below. I read all of them and I'll make sure I try to provide the best possible content for you when it comes to making a video about it. Either way, let's get started. How do you actually go and make a dividend portfolio, have $0 in passive income all the way up to $1,000? Let's begin. So if you're not new here on the channel, you guys already know that I make tons of different dividend videos, and you guys can go and watch those previous dividend videos to get an idea to get you started on a dividend portfolio. But in this video, I want to go over the entire process. How do we go from 0 to 1,000? I want to mention that because I have a nice catalog of dividend videos that you can already go and check out right this very moment if you don't know about dividends at all, or if you do know about dividends, you want to go and check it out right now. I make a monthly portfolio update. I also do a dividend update every single month, just showing which dividend stocks paid me for that month and other dividend videos. So definitely go and check that out. I'll have it linked up there, and there you go. Either way, to begin, let's start. What exactly are dividends? Simply put, dividends are a portion of a company's profits. So a company you may be invested in, they're a portion of their profits that's paid out to you every single month, every single quarter, or every single year, depending on how they actually pay those dividends out. So for example, if you're invested in a stock like Apple, Apple pays out a quarterly dividend. That means they're going to pay you out a dividend every single 3 months. So every 3 months you'll receive a dividend from Apple, depending on how many shares you actually own of Apple stock. You can have these dividends that you receive on a monthly, quarterly, or yearly basis reinvested back into the stock to make you even more money when the next dividend payout is, or you can just simply have it go directly to your actual stock account or your bank account, and that way that's your passive income for that month, for that quarter, or for that year in total. The idea of having your dividends reinvested back into that particular stock is also known as the process called DRIP, or dividend reinvestment plan. When you actually receive these dividends and have these dividends reinvested back into the particular stock that you buy, and then do it all over again, and then do it all over again, that's known as a process called compound interest. Overall, just building your capital over time passively, because you don't do anything to actually have this happen. If we take a look at my portfolio, I'm going to pull up a stock known as ticker symbol QYLD. If we go ahead and click on that, it's sitting at about $22.73 a share right now, and I have about 50 shares of QYLD. Those 50 shares are worth about $1,154 right now. So if I wanted to go and sell that, I would get roughly $1,154. But if I keep that in there and just let it sit there, then I'll earn a dividend of about 10%, which will basically give me about $11 every single month in passive income, meaning income that I do nothing for, income that I get for sleeping, income that is simply income without me thinking about it. And that $11 a month could either go back into the stock to buy me another half a share about, or it can just go to me, go straight to my bank account, and that can just be some Chick-fil-A meal that I decide to buy one day. Personally, up to you. Personally, I like mine reinvested into a certain point, and then after that, I'll probably go and take it out. But I want a lot of passive income before I go and take it out and use it as my own passive income or my own income in general. So now that you have an idea of what dividends are and what they can do for you as far as making passive income, which one do you start with? Like, how do you start a dividend portfolio? Do you start it on Robinhood? Do you start on Webull, Fidelity? Truth is, you can start on any of these platforms, but personally, I recommend Robinhood and M1 Finance to go ahead and start your dividend portfolio. Both of these apps are free. Both of these apps are super simple to use. They don't charge you any extra fees to go ahead and get your dividend portfolio started or anything like that. They don't charge you any fees to invest your money into whatever stock you want to go and invest your money to. Nothing like that. On Robinhood, it's a little bit more hands-on because you're actually going to have to go in and buy whatever particular stock you wish to buy. But on M1 Finance, you simply set up whatever stocks you plan on buying and simply put money towards it over time, and that'll just simply build over time. You don't have to keep going back every single month or every other couple days or whatever to go ahead and buy more shares of a particular stock that you may want to be invested in. Robinhood is more hands-on, M1 Finance is more hands-off, but overall you do have to set up the portfolios on either app. So if you want to see more Robinhood content, I have tons of it already on the channel, so make sure you just definitely go and check out any of my previous Robinhood videos, and that'll show you my full Robinhood portfolio. It'll show you when I buy stocks, when I sell stocks. I actually just made a video talking about that. But in today's video, I'm actually going to use M1 Finance as an example. Once you actually create an M1 Finance account and set everything up, it will look something like this. Basically, with M1 Finance, you can actually build your own portfolio. It'll be something called a pie, and in this example right here, this is actually my pie. So basically, I set my portfolio up so 20% of my money would go towards Google, Apple, 15% of my money will go towards Nike, 20% will go towards waste management, another 20% will go towards Visa, 10% will go towards Apple, Clorox will be 5%, Nvidia will be another 5%, and Shopify will be another 5%. So anytime I contribute any money to this portfolio, it'll simply split it up without me having to do any work on my part. I simply put whatever amount of money I want to put in, and M1 Finance does the rest. It'll reinvest my dividends and all that, all hands-free. Robinhood, you're going to have to actually go in and buy the stock when you plan on buying that stock, but that's not as bad as you might think it would. It's really pretty simple. You simply buy the stock when you want to buy more shares, and that's pretty much it. Either way, both of these are great options, but like I said before, we're going to use M1 Finance for the example today. Either way, I can create a brand new pie on M1 Finance by going on over here, creating new pie, and we can talk about this in a separate video. I just want to kind of get to the point, and we're going to actually build our own pie. And in this case, this is where we can actually go and pick the stocks to go ahead and put in our dividend portfolio. If you're on Robinhood, you simply search the stock that you want to choose to put in your dividend portfolio. But what stocks do you actually choose to put in your dividend portfolio? Because stocks, they're not all created equal, and some stocks don't even offer a dividend. So how would you know exactly? So when it actually comes to picking dividend stocks, I plan on having a full video series talking about just this, but that's not out yet. So obviously I'm going to give you guys a quick rundown right now. But generally, when it comes to picking dividend stocks or stocks in general, what I do first, or what I tell people first, is actually focus on what you know and what you understand about a company. So we go back on over to my M1 Finance portfolio. I'm going to pull it on up. And we can see here, there's a list of stocks by market cap right now. So basically how much they're worth to the stock market in general, how much those stocks are technically worth. We can see Apple, Microsoft, and Google, as well as Amazon and Facebook are all worth $1 trillion essentially. They're all $1 trillion companies in the value of the stock market. Either way, you want to invest in companies of what you know and what you understand first. So personally for me, I understand Apple's business model. I understand that Apple tries to make the best products and services that offer the best user experience for their customers. And if they're trying to do something like that, they would create something like the iPhone. They might create the iMac. They might create the Mac Mini, Apple Watch, all these different things that actually help the customer and try to provide the best possible user experience for their customers, and they go ahead and sell those products and services to the customer to make money. It's as simple as that. You can look at it a little bit deeper, but I also run with just products I generally use. So I have an iPhone, I have an Apple Watch, I have a Mac Mini, I have an iPad sitting right here. I have all these different Apple products, so it would make a lot of sense for me to be invested in a company like Apple. And if I'm going to go and buy a new iPhone every single year, then I should go and put some money towards Apple stock, because me buying this new iPhone, sure, if I have an iPhone for a business, it can make me a lot of money, but I have an iPhone just to have an iPhone, for bragging rights basically, then overall it's not really making me that much money. So I'm spending $1,000 a year on something that's not really making me any money versus putting $1,000 a year into Apple stock, which will definitely make me some money. So think about it that way. Think about what you're using on a daily basis. If you're big into shoes, I got a lot of shoes over there. I'm not too big into shoes, but if you're big into shoes, then you might be invested in something like Nike. If you're big into makeup and beauty and stuff like that, you might want to be invested in a company like Ulta Beauty, where you can go out and buy all these different makeup products at the store. It's that simple. So let's go ahead and add Apple. Let's add Microsoft. Even though this isn't the best dividend portfolio, we're just going to add a couple companies here. Let's add Apple, Microsoft. Let's scroll down a little bit. Let's add Chase, because I'm a user of Chase. I have their credit cards, their debit cards, their business accounts, everything like that. Maybe you're big into Walmart or Target. You might want to add them. Let's toss them on the list. Bank of America, I use Bank of America as one of my main banks. Procter & Gamble is a pretty solid company. They go ahead and make a whole bunch of different features that people use on a daily basis, and you have tons of those products in your house right now. I 100% guarantee it. So let's go ahead and add them. They're pretty solid. Disney's been around for a long time. I watch all Disney movies, Disney Plus, everything, so it makes a lot of sense for me to add something like that to my portfolio. Maybe, you gotta think about it that way. That's what I'm saying. You start with companies that you actually know and understand, companies that you actually use on a daily basis. You know what they do to make money, so it's not too much difficulty when it comes to actually doing that. On top of that, we'll get into other things, but right now this is what you do. And I also want to go ahead and add one more, ticker symbol O, which stands for Realty Income, and they also own a whole bunch of different commercial real estate. So they own a whole bunch of Walmarts, Home Depots. I don't think they own any Best Buys, Dollar Generals, whole bunch of those companies. They own all the buildings for those companies, so they actually get paid rental income every single month. And that rental income, obviously you get a little bit of profit of that in the form of a dividend every single month. So let's see, we got 8 different stocks right here already. Let's go ahead and click done at the top, and here is our portfolio that we just made in about, 20-30 seconds. Now with M1 Finance, as you can see, you can go ahead and change these percentages right here, and this is basically the percentage of portfolio that you want this stock to have. So let's say I don't want Disney to have 13% of the portfolio. Let's lower it a little bit, so Disney only has 9, and maybe I want Bank of America to have about 17. Now overall the portfolio is balanced, so Disney would have 9% and Bank of America would have 17. So if I went ahead and deposited $100, because it equals up to 100%, then $9 will go towards Disney stock and $17 will go towards Bank of America stock, respectively. And that's simply how you balance your portfolio on M1 Finance. Like I said before, on Robinhood, you simply go and buy the stocks you want. It's a little bit more work as far as when it comes to balancing and stuff like that. I don't focus too much on this, but if you want like an ultimate dividend portfolio or something like that, and you want to be a certain percentage, you want to make sure you don't really go over that percentage when it comes to investing your money, then I think M1 Finance is definitely the right choice for you. And like I said before, both of these apps are free. Robinhood is going to give you a free stock when you sign up with my link down below, and M1 Finance, I believe, is going to give you a free $50 with my link down below, a free $50 when you first sign up and get your account started. That's pretty solid stuff. I think this is the highest offer they have right now. I'm not sure how much longer it's going to last. Normally it's about $20 to $30, so $50 is pretty solid. So definitely sign up if you're interested. So what exactly should you look for when it comes to investing in a dividend stock? Because like I said before, stocks aren't the easiest thing in the world, and they're also not the hardest thing in the world, but they do offer a lot of technical resources that you can use to figure out which stock might be the best for you. If this is actually even a good time to invest in that particular stock, maybe it's too high right now, maybe it's really low right now, and it might not be coming up anytime soon. So you can look at a whole bunch of different technical things, but honestly, when I'm looking at dividend stocks, I don't even bother with a lot of the technical stuff until after I'm really done with my base research. But if you want to know some of the technical terms, we have terms like market caps, we got PE ratios, we have moats, we have positive cash flow, we have company management, and so many other things that could really determine if you should be invested in a stock or a dividend stock in particular. Now, you already know, personally for me, I like to keep it super simple in the beginning. Focus on what you know, focus on what you understand, find those companies that you may like. Like I said before, I'm going to make a video talking about this more in the future, but focus on that first. And then what the main thing I really look for when it comes to investing in dividend stocks from the rip is growth and consistency. So is the dividend stock actually growing up in growth every single year? Basically, you're getting a higher dividend payout every single year, and is the company that's actually paying out that dividend stock actually paying it out consistently? If you have a monthly dividend stock and they're paying you out every 3, 4, maybe 5 months, something like that, that's not consistent. You don't want a dividend stock that's going to pay you out 3, 4 every 5 months. If that's not what they're supposed to do, that's not what you should be invested in. You want something that's going to pay you every single month, every single quarter, or every single year, because that's the only different times they actually go ahead and pay out dividend stocks. Now, every now and then you might get a company that might pay you an extra dividend called a special dividend, but let's just not talk about that now. Either way, generally speaking, monthly, quarterly, or yearly is when you're going to get paid out. And if the company's not following that and keeping it consistent, then I personally would stay away from them for the time being. If you want to add more risk, sure, but for right now, no. In the beginning, I would say no. Try to find consistency and try to find growth. Great places to actually do this research and find out which stocks might work best for you, as well as give you a whole bunch of other technical information, is seekingalpha.com and nasdaq.com respectively. Both of these websites offer tons of free information that you can go ahead and check out as far as the growth and consistency of a dividend or other things that you may find out in your learning process of investing into stocks and getting into the whole stock market in general. You can also focus on stocks that are known as dividend aristocrats or dividend kings. Dividend aristocrats actually have a consistent paying dividend for 25 years straight. That means they're increasing their dividend and they're also keeping it consistent. And dividend kings, on the other hand, do the same exact thing, but they have been doing this for 50 years plus. So over 50 years of consistently paying that dividend and consistently increasing that dividend. You want to be invested in stocks like that. You want those to be pretty much the highest percentage of your portfolio, or around the high percentages of your portfolio, because they typically do really well. They're pretty consistent with it. And if anything were to happen to them, they're still probably going to pay that dividend out versus something that might pay a high dividend, but it might be a lot more risky as far as paying it out. It looks like it's about 65 different dividend aristocrats on the market right now, and just to name a couple of them, companies like 3M, Aflac, what else we got on here? We got AT&T on here, which I believe is just cut, so AT&T's not on that list anymore because they definitely cut their dividend by 50%. Caterpillar's on here. If you guys don't know what Caterpillar is, they do a whole bunch of construction work. Chubb is on here, Chevron, Cincinnati Financial, Clorox is on here, Coke, Colgate, so your toothpaste, all that stuff on here. Tons of different dividend stocks that are actually on here. General Dynamics is on here. Tons of different dividend stocks on here. Johnson & Johnson, that go ahead and pay out a consistent dividend for over 25 years straight. And Dividend Kings, like I mentioned before, 50 years straight of a dividend payout. Love it. So if you want to focus your research on that first and find out if those companies are something that you like or are already using on a daily basis, and I know Colgate, Procter & Gamble, stuff like that, you most likely are, then I would start there as well. You can start wherever you want to start. The whole point is that you actually do start, because the whole point is we're trying to make passive income, and you can do this any type of way you want to do it, but I'm just giving you some tools that might help you. Another thing to pay attention to is the dividend yield. I usually stick with dividend yields that are under about 5% when it comes to evaluating a safe dividend stock pretty much, but that's not always the case. There may be dividend stocks that pay out a 1 to 2% dividend yield, and you still might not get a consistent dividend. It all really really comes down to the company, and that all comes down to your research, because you might not find that out until later. That's why I say, if you want to look for the dividend aristocrats or dividend kings first, it works best as well. Some companies like Amazon and Tesla might not even pay you a dividend at all. And honestly, for those type of companies, you might not even need to get a dividend paid. Both for Amazon and Tesla, I am invested in both of those companies, and I've made a lot of money off of both of those companies respectively. So if they paid a dividend, then that would basically come out of their money to go to investors, which is cool, I guess. But I'd rather have that money, especially in Tesla's case, stay with Tesla in order to make Tesla a better company going forward. One day Tesla may pay a dividend. I highly doubt it. One day Amazon may pay a dividend. Who knows? I'm not entirely sure, but overall, a company might not have to pay a dividend, and that's not required of a company to pay a dividend. And it's also not required for a company to always pay a dividend, even if they do in the past. It's not always, if they have to change it, they have to change it. This is what it is. Dividends can get cut at any time. Just something to know. But like I said before, if you're sticking with those consistent actual dividend payout companies, then you shouldn't have too much to worry about. I always look at a dividend yield over 5% as a little bit more risky, but in some cases like ticker symbol QYLD, which I showed you earlier, they pay roughly an 11% dividend yield, and it's been pretty consistent for me for a couple of months now, so I have no issues with them. If they're going to pay me an 11% dividend yield, that's amazing. It's definitely more risky than normal, but like I said before, if they're going to pay it out and be consistent with it, I'm not mad at it at all, and yeah, I like it. I'll take it. Sometimes it just offers more risk, and the more risk actually works out to be more reward. And sometimes it offers more risk, and the more risk actually works out to be less reward. It's simply the amount of risk that you're willing to take. After you have all your accounts set up and whatnot, when it comes to actually tracking your dividends, because you do need to keep track of them, then I use a website known as trackyourdividends.com. It's a 100% free website. I made a video talking about it before, so make sure you check that video out as well. But they also have a paid version which offers you even more dividend tools to help you make an informed decision when it comes to your dividend investment journey, or even your investment journey. It doesn't have to be dividend stocks. They offer tons of tools that show you how to be a better investor as well. And they give you tons of different information as far as what a whole bunch of different stuff means in pretty plain terms, because there's no reason to have any of this be complicated, because it's not complicated. It's just a lot of terms on the internet makes it seem like it really is, and it's really not. Just take some time, learn the terms, and you'll definitely know it's nothing hard. And I made a video talking about that as well. Lastly, I use Yahoo Finance, which is also free, just to keep track of everything as far as the stocks that's in my portfolio. Basically keep track of all the news. I have the Yahoo Finance app on my iPad as well as my iPhone. It simply tells me or pushes news to me that's relevant to the stocks that I'm actually have on my watch list, or basically relevant to the stocks that I'm actually invested in. So anytime news comes out, if it may be a dividend cut, it may be a change in leadership of the company, if their earnings are coming up and I want to know what their earnings are looking like, if anything, any type of news is popping up for that particular stock, Yahoo Finance is going to let me know before that happens. And as soon as they publish an article, best believe it pops right up and lets me know. I go in and read it. Articles aren't really that long. They're pretty short, maybe about what, I don't know, an essay. You wrote an essay in school, right? So as long as an essay about, sometimes it can get in depth, but overall, if you want to know what's going on with the companies that you're invested in, then I think you should use Yahoo Finance. That's another free tool that you can go ahead and check out as well. Nothing wrong with that. Typically, I don't sell any stocks unless there's a drastic change in leadership, there's a dividend cut like the AT&T 50% one, or a better investment or something pops up and I see more interest in that investment personally than the investment that I already have in my portfolio. So overall, I don't really sell that much, but in those three cases, I do sometimes. Now, when it actually comes to structuring a dividend portfolio, that's completely up to you how you actually want to structure it. You may want to play the safe route, something like that, basically only investing in dividend aristocrats or dividend king stocks, or honestly just super safe dividend stocks. And overall, that's perfectly fine. You can do that as well. You might get a little bit slower growth and you might not make as much in dividend, but you know for sure your dividends are always going to be pretty consistent and they're going to compound on top of each other, overall making you more money. Or you could go a little bit on the risky side of things, invest in companies like ticker symbol QYLD, which I showed you earlier, or ticker symbol PSEC, which I also have in my portfolio. You can invest in companies like that. You'll get a lot more of a dividend payout if you invest the money in there, but they may cut that dividend at any given time, and then you're not out of luck, but you do have to find another investment, or you just won't get paid that dividend anymore. So personally, up to you. I like to go for a little bit of a balance. I definitely have a lot of risk in my portfolio. I personally feel like I put a decent amount of money of risk in my portfolio. I'm younger, so I feel as though I'm willing to take more of a risk. But if you're someone that's a little bit older, personally I'm 24, if you're someone that's 48, 50, 60, and you're trying to build a dividend portfolio, I would try to play it on the safer side of things. I would still have a little bit of risk, but I would try to play it on the safer side of things, only because you do want more of a consistent income, especially if you're messing around with more money. If you're going to be that age and dropping maybe, I don't know, $500,000 or something in your portfolio, then I would want something a little bit more consistent, because you got to remember, if you're investing in a stock and the stock price is going down, then you might be losing money on the stock. You also want to have a good stock that's actually going to increase in stock price. So if you invest in a stock, the stock price is going down, but they pay a really good dividend, you may lose more money on the stock price going down versus actually making the money on the dividend over time. It's a lot to think about, but the best advice I can personally give you is actually time in the market is more valuable to you than actually trying to time the market. If you think you're actually going to get a dividend stock, you might have grabbed it around $4 or $5 and you're thinking it's going to ride up to $20, you're also going to collect the dividend. Sure, it's possible, but overall, the more time that you have in the market, the more time that you actually have your dividends collect and grow over time to build yourself a nice portfolio going over time is basically just the best way to go. So the more time you have in the market, the better things are when it comes to a dividend investment or just a general investment as well. Do not try to time the market. Honestly, it's not even worth it really. I think only about 3% of investors actually beat the market in most cases, and that's very rare. And that's a lot of people investing. And if you're one of that 3% of people that can do it, sure, but I just don't know. I know I'm not. So I'm not even going to bother even trying to do something like that. So I'm going to take it the slow route, or the route that I want to go, a little bit of risk. Overall, most safe, but a little bit of risk, maybe about 10-20% of risk for me, and the rest of it's pretty much safe. 80% safe, I guess you could say, is go with me. That's why I like to roll with, and obviously over time that will change. I'm not going to be having 10-20% risk when I'm at 40, 50, 60, 70 years old. I wouldn't want to do that. I wouldn't want to risk my portfolio for a little bit more risk. It's not worth it at that age, but right now, 24, I'm cool with it. I don't mind. So overall, safe companies like Apple, Microsoft, 3M, Lowe's, Exxon, stuff like that. Generally speaking, a safer dividend should have a larger position in your portfolio than companies like QYLD, PSEC, ticker symbol Maine, BGS Foods, stuff like that's in my portfolio. I'm just basing it off of my portfolio in particular because that's what I know, it makes a lot of sense. Remember, your overall goal is to have consistent passive income, not to make the most money possible at every given moment. You're here to have consistent passive income that could overall in turn, maybe 10, 20, 50 years from now, give you passive income where you don't have to think about anything at all. And right now, I'm already doing that. Over $800 a year in passive income that I don't think about at all. I simply get it, and that number is simply going to increase over time because those dividends are going to be reinvested back into those same stocks to make me even more money on the next dividend payout, and more money on the next one, and on the next one, and on the next one after that. Simple as that. Keep it simple. Don't try to overcomplicate it. It's literally as simple as that. My Robinhood portfolio is a dividend and growth portfolio. So every single stock in my portfolio isn't dividends, or they don't all pay me dividends, but most of them do. Either way, I have stocks in here like Tesla and like Boeing and like Disney. Disney used to pay a dividend, but they're currently not paying a dividend out because of the pandemic. Boeing used to pay a dividend, but they're currently not paying it out because of the pandemic. And Tesla has never paid a dividend, and I honestly don't think they will. But overall, this is a dividend and growth portfolio, so I'm looking for both things in this portfolio. So that's what I want to get out of my portfolio in particular. You may be completely different, so I want you to invest in the way that you think will work best for you. And honestly, if all this seems too much for you, then you can do something else. You can do something even simpler to basically be invested in the market, be invested in all these particular stocks, not have to build a portfolio basically at all. You can simply invest in a dividend ETF. A dividend ETF is basically a whole bunch of different stocks compiled into one single stock. You put your money in that one single stock and invest your money across a whole bunch of different dividend stocks. That way, it's basically the same thing you would do on M1 Finance, which you would make your own portfolio, but they've already made a portfolio for you. My favorite dividend ETF right now is ticker symbol DGRO. I actually just made a video talking about it about last week, so make sure you check that video. It's a pretty short and sweet video. It'll give you the rundown of a couple of different dividend ETF stocks, so definitely check that out. But overall, with ticker symbol DGRO, that's actually a core dividend and growth ETF. So I think that personally aligns with my portfolio and my investment strategy in general, so I want to be invested in something like that. It gives me dividends, it gives me growth, it gives me a little bit of a lower dividend at about 2%. It also provides me with a lot of growth because there's a lot of growth stocks in there. A lot of those growth stocks don't pay a high dividend, so that makes sense. On top of that, it provides me with a consistent dividend, and they basically invest in stocks that have been paying a consistent dividend for about 5 years straight. 5 years isn't anything to brag about, but it is still a very long time. But that's the perfect balance between dividends and growth that I'm looking for. That way, I can go ahead and get companies to be invested in my portfolio, and I don't have to worry about searching for all those companies that may be in that particular ETF. That's perfectly fine with me. If I ever want to go ahead and look it up and figure out what companies are actually inside of ticker symbol DGRO, then I can simply go to ETF.com, and it'll give me a full list of all the companies that are invested inside ticker symbol DGRO and basically how the portfolio is actually balanced. I can then go and actually make that portfolio for myself for free on M1 Finance, or I can simply invest with them and pay a very, very, very small fee of 0.08% every single year. And there's other dividend ETFs that do the exact same thing. Some are a little bit more expensive as far as an expense ratio, or basically the money you have to pay out every single year, but most of them are relatively cheap, and they're all honestly under 1%. And if they're over 1%, then I wouldn't be invested in them at all. But another one, if you're interested, is ticker symbol SCHD. It's basically the same exact thing as ticker symbol DGRO with a little bit less known companies, but overall they do pay a higher dividend at about 4% as well. So personally speaking, you can do that. I'm invested in ticker symbol DGRO as well as having my own particular stocks that I want to be invested in personally. So you can do that, or you can just simply keep it all in the dividend ETF. Just keep pumping money consistently to that dividend ETF and you'll be all good to go. You'll get a consistent dividend payout every single time they pay it out. And that's it. And remember, we want that consistent dividend income, but we also don't want to be invested in companies where the stock price is going to go down. So if you're invested in companies where the stock price is questionable, or the stock price or just doesn't make sense, or the company's not doing too well, but they're paying you a high dividend, you may lose more money by investing in a risky company versus investing in something a little bit more safe and making the money in dividends. Just something to think about, something to take with you. It's that simple. We want those year-over-year returns going up, not down. So I hope all that information can help you actually get started with your dividend portfolio and get started making some passive income as early as next month. Make sure you go and start and invest in companies that you know and understand. If you don't, check out some Dividend Aristocrats or Dividend Kings. I'm sure you're already using some of those brands anyway. Also, make sure you can invest in what you can actually afford to invest. So that means if you want to put $500 towards the market every single month, if you don't have $500 to invest, or you got bills to take care of and stuff like that, then don't invest $500 a month. If you gotta do $10 a month to get this started, then do $10 a month. If you want to do $20 a month, $50 a month, right now I'm doing $100 a week. If you want to do that, then do that. It's personally up to you. I can't tell you how much money to invest in, but I can tell you just to get started, because the worst you can do is not start. Start today, even if it's as little as $1 a day or $5 a week. I really don't care. Just start investing your money. You're gonna make more of a return by investing your money than have it sitting in any bank account that's gonna make you any amount of interest, maybe 50 cents a year, maybe. I don't know. Or you can go and take your money and toss it all like crypto and lose it in about 2 days. I love crypto, but yeah, you can do that as well. It's personally up to you, but I wouldn't really recommend that. I like the dividend thing as well. I'm investing in crypto, but that's besides the point. Either way, do what you gotta do. Get your portfolio started. I have tons of videos already showing you my portfolio, how I lay out my dividend portfolio. I showed you my M1 Finance portfolio. I showed you my Robinhood one. We can build an ultimate dividend portfolio. If that's something you want to see on the channel, we can do that as well. Link it down below and let me know if that's what you want to see. Anything like that, but just get started. So listen, just please, just get started. I promise you, it'll work out. Keep it consistent. Don't put $100 in 1 month and never touch it again. No, put $100 in a month, every single month, and just watch it grow. Trust me, it's gonna grow. It's gonna grow. Mine did the same thing. I didn't expect. Last year it was at 0. Now, last year my account value was at 0, and now my account value is at $31,000 in a year. A little bit over a year, like a year and like 4 months. But the whole point is, it's been a year. Either way, if I can do it, you can do it. And I'm not the smartest guy. If I can do it, you can do it. You're probably smarter than me. Come on. Get started. That's all I can really ask you guys to do. Please. Thank you very much for watching this video. If you learned something from this video, make sure you hit the like button. Make sure you subscribe to see more content like this, because I'm going to be bringing you the best fire content I can do. Also, make sure you check out my Discord, link down below. That's a 100% free Discord. We talk about everything personal finance in there. So dividend investing, of course, that's included. Check out the Patreon if you want to further support the channel. I'm going to have a Patreon tier set up where you can actually talk to me one-on-one every single month. I'm still working out everything for that, but once that's done, that'll be up as well. The t-shirts right here, I'm getting paid right now. Dividends, that's coming soon. Hopefully by the end of this month. I'm trying to have the website launch for that, so you guys can get yourself some nice t-shirts, some Dollar Mike tees. Yeah, that's a lot of information. Either way, like I said before, like it. Thank you for watching as always. I know this was a super long one, but I wanted to give you as much information as possible, because most of the videos, everything's kind of spread out. So I want to put it all in one single video. So there you go. Thank you for watching. As always, I really do appreciate it. I'm out. Take care of yourselves. Stay hydrated. Stay safe. Dollar Mike. Yeah, let's go water. Peace.